Good afternoon, everyone. Our esteemed guest participants are our Honorable Chairperson SRSB and Honorable Vice Chairperson Chairman SRSB and participants around the globe. Welcome to our webinar titled Webinar on Decoding BRSR, a Comprehensive Understanding of BRSR, Series 3, organized by the Sustainability Reporting Standards Board of ICAI. We are privileged to host this webinar today. Now we would like to invite our event enabler CA Payal Jain ji to welcome our chairperson SRSB. Over to you, ma'am.
Thank you, Shweta ma'am. It is a privilege to introduce our very dear CA Sri Priya Kumar ma'am. So, CA Sri Priya Kumar ma'am is a Central Council member of ICAI and chairperson of the Sustainability Reporting Standards Board. She is also director of the Institute of Social Auditors of India and vice chairman of ICAI's Corporate Laws and Corporate Governance Committee and Professional Skills Enrichment Committee. She has significantly contributed to various ICAI committees and boards, including the Corporate Laws Committee and the Expert Advisory Committee. As a registered insolvency practitioner, she leads played a key role in drafting the bankruptcy and insolvency code and has delivered over 300 lectures as a faculty member. We welcome you, ma'am, and request you to address the participants.
Thank you very much, Payal Jain, and to the Vice Chairperson of the Sustainability Reporting Standards Board and the Chairperson of the Professional Skills Enrichment Committee and the Ethical Standards Board of ICAI, CA Dr. Anuj Goyal, who's been tremendous support in demonstrating very true leadership in terms of letting go, whether it's me or whether it's, and he's very, very senior to me in the council, having been in the ICAI system for about 25 years easily, and possibly one of the youngest council members to have gotten into the Central Council at that point in time. To our speaker for the day, again, a very, very eminent, more importantly, a very committed resource person. And from whatever he speaks, you'll see that he's so passionate about carrying this message of sustainability, especially to the small and medium practitioners. And the secretary of the committee, CA Shweta Goyal, and the team that's assisting Manish ji. I must say we're truly becoming, very ESG, I wouldn't say compliant, but very ESG focused. Because in this webinar, we have, diversity at its best. We have 3 women and 3 men, and we've beaten the 33% average. So very happy for it. In terms of a short introduction to this webinar series itself, so we thought it's very important. Most of us don't want to get into things that we don't know. And ESG is one of them. It's been so even in my case, until a year back, I really, really did not get into ESG. Now with being the chair of the board, I ought to get into it, and so I've gotten into it. But what really struck me was, whether it's ESG in terms of consulting for a client or advisory, or ESG reporting, or ESG assurance, the market is dominated by a few players, a few large players. I thought this is something that we must work on because it's definitely not so complicated that the rest of us can't do it. So, and in terms of ESG, it's not going to be only for the top 1,000 listed companies and the big companies of the world. It's going to be for everybody. It's going to be for SMEs whom you and I actually work with on a daily basis. So the whole idea was to actually demystify what is this ESG for the larger fraternity and hence these webinars. So what did we do? We started with what is BRSR, which is the reporting in the Indian context. So let me take you a few steps back. ESG reporting is a very generic term. It stands for reporting on environment, social, and governance. Why did this happen? This happened because world over, people were focused more on profits. They said, no, you must, in addition to prosperity or your profit, also take care of people and the planet. So the entire ESG is built on 5 core themes, which is people, planet, prosperity, etc. Now, and then, everybody says we should leave a better planet than what we inherited. So, and the actual business world is a very, very large player in this, in contributing to emissions and in actually causing degradation of the natural resources of the world. So, world over, everybody through a series of international conventions said, look, we can't deteriorate the planet at this stage. We must do something about it. So, all these climate change actions happened, and they said, okay, one of the most important things is not just doing, but it's for the rest of the world to appreciate what you're doing. And that is what is called reporting, which is why ESG reporting evolved. Now, in the Indian context, let me bring it down very quickly to the Indian context. SEBI in 2017 mandated, voluntarily said you must do voluntary integrated reporting, which is how do you merge your financials, everything into one bundle and give it. And I'm told about 100 to 150 companies in India are doing integrated reporting. Then SEBI came up with something called as a BRR, a business responsibility reporting, which has now become BRSR. That's business responsibility and sustainability reporting. SEBI has given a standard format to be reported on by the top 1,000 companies, listed companies by market capitalization. Now, they appended, they said, okay, this BRSR is a self-disclosure. The company has to give. They created something called BRSR core. And they said the most important elements in BRSR, please do it for the top 150 listed companies with assurance. Now, everybody has to do BRSR and BRSR core. BRSR core, reasonable assurance has to be done by the 150 top listed companies. Now, look at the financial statements. They're obviously aligned to a set of principles, right? So how do you make your financial statements? Fundamentally, financial statements are intended to be made in accordance with the accounting standards. So that's where your primary disclosures originally evolved. Now, for example, related parties, you'll have to disclose. Now, additionally, MCA notified a Schedule 3, which is the format of the financial statements. Just like that, SEBI has introduced BRSR, which is basically presenting data, about 135 plus questions, in a particular format. Now, one must importantly understand in your financial statements, what is the ultimate objective? Ultimate objective is that the financial statements need to reflect a true and fair view, and they need to disclose every material information for a user to make a decision. Similarly, BRSR hinges on obviously ESG, but what is the substratum of the ESG? They are called as the 9 principles of the NGBRC, which is the National Guidelines on Responsible Business Conduct. So it's the 9 principles of which we are going to discuss one today, which is principle number 6, which is about caring for your environment. Now, having said that, where did the NGBRC, how does it link to, you can say NGBRC is only for India, right? Now, NGBRC must, and today in the world, nobody invents or reinvents a wheel. We adopt it from elsewhere and we adopted it from a global benchmark. The global benchmark is called the SDP goals. The UN SDP goals, there are 17 goals. Now, these 17 goals, India decided we would frame an NGBRC. See, the goals are the same, right? I need to reduce waste. I need to make the earth greener. I need to have inclusion. Now, in countries like South Africa, there are very specific inclusion programs where they try to empower the disadvantaged communities, even in terms of specifying number of suppliers that you'll have to call. It's called the BEE, or it used to be called the BEE. Don't know if there are changes now. It's an economic empowerment program. So similarly, so our substratum is built like BRSR and BRSR core. Under that is your NGBRC, and under that is your UNDP Sustainability Development Goals, which is what you need to, eventually what the world needs to do. And at the end of all this, what are we targeting? We are targeting a net zero status. Just look, what I take and what I give back should be the same. And all these efforts, in addition to sustainability, there is social parameters as well. How do we include people with handicaps? Should there be more women in terms of diversity? Diversity not only at the lower levels of corporate organizations, but at the higher levels, etc. And quickly, in terms of the NGBRC, now in terms of this webinar, we have finished 5 principles of NGBRC, the principle-based reporting. Now let me come to the structure of these webinars. In the first webinar, we introduced you to ESG reporting, BRSR, etc. Then we moved on to the disclosures. The disclosures in BRSR are in 3 segments. General disclosures, what I would call the governance and leadership and strategy disclosures, and the third is the principal disclosures. Now, SEBI wants us, India wants us to say how in terms of each of these principles of NGBRC, which are the goals, how do you measure yourself? How do you report yourself? So, and then we come to principle 6, which is actually referred to as, and which reads as under, it says businesses should respect and make efforts to protect and restore the environment. And that is going to be the theme of this webinar today. What are the contents in BRSR? How do we actually proceed? Sushilji, I'm right? Yeah, Sushilji had a slightly quizzical expression, so I was a bit
Absolutely
concerned.
right. No, I was quickly reviewing my notes because I know you're going to throw the ball.
And in terms of principle 6,
Perfectly
what are we asking for? What does the government want us to report and disclose? They want us to disclose the greenhouse gas emissions. Scope 1, Scope 2, Scope 3. I'm not going to talk about it because Sushilji is. They want us to talk about water. What is the consumption? What is the intensity? Suppose I make cars. How much cars am I consuming per car that I manufacture? What is the water I discharge? What's my total energy consumption? What's the footprint? How much of it comes from renewable sources? So renewable sources would be a plus, right? You're rated better. How do you embrace circularity? How do you handle waste? How do you handle plastic waste? How do you handle e-waste? Now, e-waste is becoming a big thing. In fact, there's a very recent change that's going to come about in the context of special economic zones, where they initially said if an SEZ makes e-waste, they have to export it. But it was very cumbersome. So they've said, okay, you don't need to export it because it costs more. What happens to your battery waste? All these discharge very, very harmful chemicals into the environment. So this is the broad theme that we are going to discuss today, and it's over to the speaker, and my compliments to the office for putting through this together. And at the end of this webinar, I'm going to request office to make a nice brochure which introduces what we have done and to give the video links. All these videos are recorded on the ICI TV channel. So we'll publish a brochure cumulatively. So we'll give you the video links till the 6th principle, so that any of your colleagues and friends who've not been able to attend these webinars will be able to go through this in detail. And if you find it a bit slow, you can always increase the speed to 2x and go through this very quickly. And in terms of the board, we are very, very happy to assist. And we're going to introduce a set of faculty development programs. We're going to invite everybody. And then those who feel confident, we'll upgrade you and request you to be a faculty. So thank you very, very much. And it's back to the Master of Ceremonies today.
Thank you, ma'am. Thank you for your enlightening address and for setting a strong foundation for today's discussion. And your leadership and guidance in navigating through complexities is empowering and motivating all of us. Thank you, ma'am. Now we would like to invite CA Payal Jain to introduce our chairman, CA Anuj Goyalji. Over to Payal, ma'am.
Thank you, Shweta ma'am. Again, as Sri Priya ma'am said, we have the most youngest Central Council member with us, and it is again a privilege for me to introduce him. He has been an influential figure in the accounting and finance community, serving as a Central Council member of ICAI and as chairman of multiple high-profile committees, including the Ethical Standards Board and the Professional Skills Enrichment Committee. His leadership extends to the publication and CDS Directorate and his past roles as chairman at the Ghaziabad chapter of the ICSI and ICMA. With over 30 years of distinguished service, including 17 years on the Central Council, his contributions have been pivotal in shaping the profession. Dr. Goyal is renowned not only for his extensive experience, but also for his intelligence and for his hard work. We welcome you, sir, and request you to address the participants.
Thank you, CA Payal Jain ma'am, our honorable event enabler from the star branch of the world, Bhilai branch. She has served as immediate past chairperson of the Bhilai branch, and of course the Sikasa chairperson at present of the Bhilai branch. We are having the presence of our honorable Central Council member, our dynamic Central Council member, dynamic chairperson of this very, very important committee, Sustainability Reporting Standard Board, CA Sripriya Kumar ma'am, honorable Central Council member from the southern part of the country, from Chennai. A very, very big round of applause for Sripriya Kumar ma'am. She is the vice chairperson of Professional Skill Enrichment Committee, and by example, she is leading PSCC as well as the Corporate Laws Committee. So I think the way she is contributing something really, really great in this sustainability reporting standard board also. We are having Sushil Kumar Sharma sir, our honorable guest speaker, and of course we are having our secretary, Shweta Goyal ji, secretary, Mr. Goyal, and other members from the office. And all the delegates who are presenters, not only from India, but also from other parts of the world. A very, very good afternoon. I am really very happy that we are having this webinar on decoding BRSR, a comprehensive understanding on the BRSR. It is series 3. And I'm really, really grateful that Sripriya ma'am is trying her level best to see that how we can really do something very, very concrete for our mother nature through this sustainability reporting standard board. And our honorable members will certainly be in a position to get the expertise so that they will be in a better position to serve the trade and industry, serve our nation and entire world also. And friends, in today's dynamic business landscape, clear and reliable environmental sustainability disclosures are paramount. They not only enhance environmental responsibility, but also build stakeholder trust and pave the way for sustainable growth. The session will equip you with the practicalities of implementing BRSR framework within the context of Principle 6, and will guide you into understanding of the specific requirements and the effective integration into your organization's sustainability reporting. So we are having the best of the resource person, and we are having, of course, all the respected participants. As Sripriya ma'am has already covered each and everything, I will not be coming between all of you and Sushil sir. I once again welcome all our honorable delegates on behalf of the ICI and on behalf of the Sustainability Products. Thank you very much.
So, thank you. We will be privileged to have your as a vice chairman of SRSB and your remarkable contribution for driving us towards a more sustainable future. Thank you, sir. Thanks a lot. Now, we would like to welcome we would now moving on to our technical session of today, which promises to be equally enriching and focuses on providing a comprehensive and a standardized approach to report on environmental, social, and governance aspects. Now, we would like to invite our next event enabler, CA Ankesh Sinha, to welcome our guest speaker of the day. Ankesh. I think CA Ankesh is not able to log in due to some internet problem. We would like to invite...
Am I audible, ma'am?
Yeah. Please continue.
1 minute, ma'am.
Am
I audible, ma'am?
Yeah, you're audible but not visible.
I don't know why.
Sure,
Okay.
please continue.
Yes, Social Sharma. So, good afternoon, everyone. So, CA Sushil Sharma, He is the founder, managing director, and the head of research and design at the Stratism, a leading global capacity building and talent management firm. An expert in sustainability, he is proficient in SASB, TCFD, CDSB, GRI, and GHG protocol. His expertise is sought by two of the world's four largest rating companies, a chartered accountant with an MBA from IIM Bangalore, an associate of the Chartered Insurance Institute, UK. Sharma has 22 years of experience in banking, insurance, financial service, and 80 years in design, consulting, and teaching. He has authored 2 books and is a renowned speaker. We welcome you, sir.
And I must hasten to add my small bit. The board, in addition to the webinars and the programs that we are expected to conduct, is also expected to contribute regularly to various consultation papers that come out, whether it's from the Ministry of Finance, the DEA, or SEBI, or other regulators, and even preparers sometimes request views. In all of those, where we elicit sort of seek support, Sushilji has been very, very gracious in helping us out, and all of us are learning. So we figured out that we actually put out all these bits and pieces of information because this entire aspect of sustainability has been so vast, and the board is new, so we're just about a few years old. So thank you, Ji. Thank you, Sushil. All the help.
Thank you, sir. Now stage is yours, sir.
Thank you for very kind words and setting very high standards for me to sort of live up to. Let me see if I'm enabled to sharing screen. Yes, I am. Is that right? Yeah, this. Okay. So I would like members attending this session to think of themselves in 4 different roles, or consider 4 different roles. There is someone who is preparing a statement. That preparer is assisted by a technical person. As we will see, there are technical dimensions that you look at. And then you are also an assurance provider, a potential assurance provider. And so you have multiple roles to fulfill. A preparer, and the last role is a consultant. And members of the community should be open to all these roles. It will be my endeavor while we cover this session today, and honestly, a detailed coverage of Principle 6 covering environment in the time allotted is a challenge, but let's see whether I'm up to that challenge. It is often said that you really need to know your subject well to convey it in a shorter time. So much so that a really masterful person could potentially convey it in a few sentences like Shri Priya Madam perhaps just did. Quickly, there are 3 sections, A, B, C. A covers all of your general corporate information. B covers the management and policy. And when we go into C, C is where we have all the principles-based disclosures. You can see the full listing here. This maps to NGRBC that Shri Priya referred to multiple times. P1, 2, 3, 4, 5, 6, 7, 8, 9. And 1, 2, 3, 4, 5, which is ethics. Safe and sustainable products is 2. Employee well-being is 3. Stakeholder interests is 4. Human rights is 5. And we are at 6, right? So we are going to go through 6. As Madam explained, everything is available by way of recording, but also through the Sustainability Reporting Standards Board. The kind of resource that I am showing over here is also available to you with absolutely no cost involved, particularly for members of the CA community. By now, you should already be familiar. So there is the overarching principle under for 6. Businesses should respect and make efforts to protect and restore the environment. Okay. because enterprise inherently makes use of resources, natural resources, economic resources, social resources, and then while using it, we are supposed to protect. And if we could not protect, we should make efforts to fully restore. So it's a balance between preventing the damage and then repairing the damage. So the left of the screen has got what is called essential indicators, EI over there, which you see in the BRSR format. Once again, as Shripriya Madam crisply explained, the BRSR template, the format is a line-by-line compliance document. You can view it as filling the form in its lowest, least evolved, or simplest understanding. It's a form to fill. But it takes some intelligence to fill it in a way that makes a big difference to the business. And it is often my endeavor to request member chartered accountants, because none better and superior than a CA, to emphasize to the business community, this is not just a compliance tick all the boxes process. You can enhance revenues, you can reduce costs, you can bring down cost of capital. It all depends on how you take to this task, which is why I say a technical person, a preparer, an assurer, and a consultant. And we as a profession have the potential to be at least three of these. We can't be all four of them. You can't be the preparer and the assurer. But short of that, three of them, you can certainly occupy the slot. The time is now. You really, really should equip yourself quite intensely in this area. It's a domain which you will see growing over the next 10, 12 years. I've already been working in it for 4 years, and we are still to gather full momentum. So it's a great practice area. Whether you're a working professional attending this session, or you are a practicing chartered accountant attending this session, adopting this domain can completely accelerate the next 10, 12, 15 years of your career. Now, on the left-hand side of the screen is essential indicators. These are expected to be disclosed by every entity. It's not exactly called mandatory, but let's understand it as expected of you. On the right-hand side are the leading indicators, LI. Leading indicators are voluntarily disclosed by entities which aspire to progress to a higher level. Okay. So on the left, you can see that there are 13 essential indicators. On the right, you can see there are 7 essential indicators. And when you want to understand these 13 as groupings, actually 13 plus 7, 20 in all, if you want to understand that in a logical sense, this here is listed. Listed allows, it's something that a CA typically looks for. What is 1, what is 2, what is 3, what is 4, what is serial number? Have I got everything covered? Right? The other way to look at it, especially when you're learning, is to look at it in this grouping. So here you have 10 themes. This covers energy, emissions, water, waste, biodiversity, environment impact, scope 3, environment law compliance, which is failures in pollution control, and therefore you got fined. Yeah. Disaster recovery and value chain partners. I'm going to use this to tell you what are the big ticket items. Across all of sustainability reporting, any framework, any part of the world, energy, emissions, water, waste, 1, 2, 3, 4 are dominant themes. And 9 and 10 are also dominant, but one notch below 1, 2, 3, 4. What is not here is social and human capital, which is covered under P3 and P5. P3 is people, P5 is human rights. And we have this very dramatic example of Soam distilleries from June 18th, slave labor found in their plant at Madhya Pradesh, and bad news, stock tanks by 18%. One of the units is sealed. If I was to make a random assumption, this is completely random, I have not done any further detailed analysis. If that sealed unit is 20% of the capacity of that company, then please expect 20% lower turnover proportionally for the period which the ban remains in force. And this is one of the important areas to understand about the risks, sustainability risk. If you violate any of the principles and part of your enterprise is asked to be shut down, then you, your shareholder, your lender, and by extension, the market, everyone is disappointed in the company. If it is a listed company, the disappointment is visible in the stock price movement. The same is true of these 10 factors that you're seeing on the screen here. Let's look at, if I just jump to serial number 4, I'm not going there, just look at it, waste. Then my favorite example is Pollution Control Board asking leather units in Kanpur to stop operations because they were habitually releasing effluents into the Yamuna, and the project to clean up the Ganga was negatively impacted in the sense that downstream from Kanpur, the river was a mess. Now, if you were a bank that had lent to that leather unit in Kanpur, then you're saddled with an NPA. The flip side of this is, if you're a good, clean, green, top-notch company, you should expect marginal to significant lower rates of interest or easy access to equity funds from any kind of investor, whether it is angel, venture capital, private equity, and in fact, going public, the sustainability stock exchange movement, of which NSE is a part. And this should register well in your head, that while BRSR is mandatory for top 1,000, if you go for an IPO listing, NSE will ask you, because NSE likes to say that all the stocks on our exchange have a high level of ESG, sustainability, awareness, standards, and compliance. So these are thematically 1, 2, 3, 4 are what we are going to spend more time, given that we have a time allocation issue. 1, 2, 3, and 4 will get slightly more time. And this serial number 7 called scope 3, please consider it as together with serial number 2, part of emissions. And I'm going to teach you in exactly 30 seconds, when the time comes, what is scope 1, 2, 3. Okay, so that you have a very simple understanding. For deeper understanding, you can study hundreds of pages, no problem, and I'm always there to assist. What are the ones which will get minimum attention from me? Environmental impact assessment. Okay, so when this BRSR format asks, have you done an environmental impact assessment? The way this is currently being followed, okay, the way this is currently being followed, did you set up a project which needed environmental clearance? If it needed environmental clearance, did you do the assessment? If you did the assessment, can you upload or share the link of where that report is? So this is being viewed as project specific right now, and I'm going to leave it there for the moment. Environmental law compliance is wherever you ran foul of the law, you were fined. And looking at that fine in the BRSR report, 2023 year ending, 2024 year ending, 2025 year ending, if I as an analyst can say that the trend of fines for various violations is coming down, trending to 0, or is at 0, then I can say that this organization has fully absorbed what it means to be sustainable, and is no longer running into trouble with the law. So currently, it just reports fines. Disaster recovery, those of us who are familiar with business continuity planning and disaster recovery planning understand BCP, DRP to be, I'm a bank, my core server collapses. Is there a mirror site from which core banking operations can be run? I am a company who has principal operations sited in one particular location. There is a fire or an earthquake or a storm or some kind of issue by which that entire zone, city is shut down. Do I have a backup site from which I can run it? But in the sustainability context, this is also a climate event, an environmental event which disrupts your manufacturing capacity or your ability to service your clients. And what plans do you have to overcome that climate risk? We understand climate risk quite easily in India nowadays. Flood, drought, simple examples of climate risk. Extreme temperature under which if you cross 50 degrees, ILO says work sites should be shut down. So that kind of shutdown, and that runs through a heat wave, so you're not able to operate your site. These kind of events, what is your disaster recovery plan, is one dimension. Serial number 10, value chain partners. If you work in a large organization, Shri Priya ma'am spoke of core BRSR. SEBI wants the largest of the companies to look into their suppliers and see whether their suppliers comply with the same issues that you see on the screen. Because there is to back that, there's a McKinsey report which says 75% of all supply chain issues arise in, 75% of all environment and social issues arise in the supplier's location. So if you got emission of 100 units, chances are 75 units originate at some supplier's place. So therefore, it makes sense to reach into your supplier's location and have them adopt good practices. And that there is an opportunity for all practicing chartered accountants to reach out to their clients. If the client is not in top 1,000, by fixing its environment, sustainability, ESG issues, you can become a supplier to a large company. And today, if you want to export, you have to be, adopting these standards and measures. So why don't you voluntarily do a BRSR and use that as a marketing document, saying that it's not obligatory for me, but here are my compliance with, here is how I adhere to national standards. And that allows you to approach new customers and new markets. So value chain partners, when you look at it from ITC outwards, value chain partners must supply similar data that ITC has to supply under BRSR. But when you look at it as a smaller company, you can treat it as a business revenue generating opportunity where you become BRSR voluntarily compliant and then go calling on a large company for orders or look to US, Europe, and other countries to export to them. So we are going to group our topics as we understand them. So here's back to the listing. The first one is energy consumption. Now, I have about an hour and 20 minutes. I'm going to ration my hour and 20 minutes into things that you can use, things that I can simplify for you, thereby saving you time in the future, and things that will make a difference to your daily life. There, in each of these, there is other stuff. You're not going to learn all of it in 1 hour, 20 minutes, right? But the ones that are important, the ones where you can save time by listening to me, and the ones that you want to note down as a thing that you can do, either technically or as a preparer, or take note of from an assurance perspective, or take note of as a consulting opportunity. First is energy consumption. So energy consumption is P6 EI, essential indicator 1 and 2. Now, energy consumption is a proxy for climate damage via emissions. Okay. Now, there are two sources for you for emissions. One is conventional, which means thermal power plants, which generate an awful lot of smoke. One, they generate an awful lot of smoke. Two, if they use coal, then that coal itself came from a mine. And mining, digging up the earth, as I'll share with you later when we do emissions, creates environmental issues. Okay. And I'll cover that when I cover greenhouse gases. Okay. So EI1, essential indicator 1, requires you to give your energy data, and I'll share the format with you, and I'll show you how in 2024, one leading company, one or two examples I have taken for most of the important ones. I'll show you how the data looks. Okay. But I will also share with you what SEBI has put out in its core document, where it specifically talks of what you should look for in data and what you should look for in assurance. So we will do this methodically. We will allocate our time to the things that matter. So one is energy consumption data is important because it's a proxy for emissions. If you're trying to save the world, you should be using less energy. For example, I've lit up this room in full so that my beautiful face can be seen by everyone. But did I need this lighting given the daylight outside? Okay, I've got LED, so I'm kind of, but I could equally put it off, right? Because one is it's day, two is I'm not anything great to look at. Three is the most important stuff is on the screen. Now, the second box over there, renewable sources of energy are from solar, wind, hydrogen, gas, nuclear, which nuclear, mind you, brings its own set of problems. And lastly, biofuels. Of these sources of energy, the one that I am going to mark out for CAs to take note of is hydrogen. But let me say this. If your electricity, let's say you're running a factory, your electricity supplier should be able to give you a certificate. This is the direction of evolution. How much of the electricity that is power that is supplied to you comes from non-renewable and how much comes from renewable, that mix. Okay. But here in box number 2 in the middle of the screen, if you have a solar farm, if you have a a wind farm, solar panels, then how much are you generating? And that is your renewable energy consumption. So typically, if you are consuming 100 units, but feeding 30 units from solar back into the grid, you can say that I am 70 thermal and 30 solar, right? So as the world evolves, certification for all this from your power producer will be available. If you go into the Wipro BRSR report of last year, they'll tell you 45% of all their energy comes from solar panels, which they've installed on top of every building that they have anywhere. Okay. Now the assurance guy will want to know, how did you arrive at 45%? Park it. They are right now declaring this. I don't know what is current year. This is last year data. Okay. That is one. The EI2 is a simple question. Are you under PAT and have you achieved its goals? So if you're new to BRSR and if you are like me, who's been in consulting, knows BRSR, knows sustainability reporting, but actually doesn't know the Indian environment. So what is PAT? Then it's a regulatory instrument to reduce specific energy consumption in energy-intensive industries with an associated market-based mechanism, blah, blah, blah. You can read more about PAT over there. And for greater enlightenment, I have taken Indian Hotels disclosure on EA2 and shared it. It will come in the next following screens. This reference tool that I'm using to so easily navigate is available to you, and please contact institute or whatever, or you got the BRSR template. Okay. So how does the data actually look? The data actually looks like, okay, this is how the data looks. This is from a hotel. Okay. Now I'm going to go back to what SEBI has put in the core circular. Oops, what am I doing? I'm going to go back to the circular that SEBI has put to point out certain things, but I'm going to come back to this screen in other words. But before that, let me cover this for you. So this is actually the template. And what Indian Hotels has done is just taken the template, fill in the blanks. Right? Now, these numbers are relatively easy to, all those are, the first row is in gigajoules. Okay. So gigajoules is the unit of measurement for electricity consumed. Right. And it is 2,42,164. Giga is already a multiple gigajoules. Gigajoules is a technical term. This measurement should be available from total amount of utility bills converted from kilowatt hours to gigajoules if you need. And that is where a technical requirement crops up. Now, we are not technicians. This is a little new to us. Our traditional reporting roles involved only financial system. But if we are going to do things like gigajoules, one way for you to encourage your clients to do preparing is to go in with a good, solid technical person in emissions, and then, do a end-to-end job for your client. So that would be technical, whom you bring along, and preparer and consultant rolled into a single role. Okay. The next line is fuel consumption, also in gigajoules. So then you'll ask me, dude, fuel is measured in liters. So yes, 1 liter of fuel of a particular grade can be converted to energy count gigajoules. Okay. Then other sources of energy consumption, no, nothing. Then this is the total. Then comes electricity from, this is non-renewable, how much? And then below is renewable, how much? Where is renewable gone here? One more screen? No, not one more screen. Okay. I didn't pick that. Actually, sorry. The top is renewable and below is non-renewable. Okay. So that we get the total energy consumption as 7,41,495 gigajoules. Now comes the intensity question, what is called normalization. If somebody says, I have consumed 741 lakh gigajoules of energy, and someone else says, I have consumed 3 lakh gigajoules of energy, who is the better company? You can't just decide by looking at 3 lakh and 7 lakh 41. You have to convert it into per unit of some value, which creates comparability. Now, Indian Hotels, you can compare last year's data. 710 has become 741. Now, does that necessarily mean bad? May not necessarily be bad. If they added 25% more hotels, but their energy consumption has gone up only by 30,000 gigajoules, that means they're doing fantastically well, right? So it's not just the number in its absolute terms, which is why BRSR requires energy intensity per rupee of turnover, energy intensity per rupee adjusted for purchasing power parity. This is current year new, starting from core over previous year. So what you have to do is you have to use the metric published by World Bank for India. In purchasing power parity terms, we are 22.88. The rupee dollar rate is 80 something, but in PPP terms, we are much better. We are 22. Imagine if you were able to, um, pay your bills overseas by for 22 rupees getting a dollar. If you pay 22 rupees for a dollar, dollar is cheap. If you pay 80 rupees for anything, it is expensive. But in purchasing power parity terms, we are in a much better shape. And so when you convert to purchasing power parity, it puts you in a comparable footing vis-a-vis the rest of the world. So let's go back to energy intensity per rupee. Suppose you say that my energy intensity per rupee is 168 gigajoules per crore of Indian rupees. And you come to some other company which is not in this industry at all, let's say an IT firm, and that IT firm says my energy intensity is 150 rupees, 150 gigajoules per crore of INR. Then you can say that IT company per rupee turnover consumes less power than this hotel company, which consumes 168 gigajoules. Now, this comparison between a hotel and an IT company is not a great idea because they are different businesses, but still, when you convert it into per rupee, it tells you something about how much is the energy intensity. That is that word, energy intense. How much energy does this industry require compared to how much energy does that industry require? Okay. Random example given by me. But then you go down to the last row. Energy intensity by guest night. Now, this makes one hotel completely comparable to any other hotel, right? So, how many gigajoules of energy you consumed per guest night that stayed at your hotel? So, your hotel may have 1,000 rooms, but if it is having only 70% occupancy, then for 30 rooms, the energy consumption is lower. So, based on occupancy per guest night. So, you can see here 23, 24 for Indian hotels, comparability across years. So, all these intensities per rupee of turnover, per million rupees as per purchasing power parity, per unit, give you comparability across industry, within the company last year to this year. And this data tells you that last year our per guest night energy consumption was higher. This year we are 0.01 lower, which is on 23, somewhat 4, 5, whatever percent, right? So there is some improvement in the energy consumption, which you can also see in energy intensity per rupee. Last year, energy intensity per rupee revenue was 191. This year, it is 168. So they are doing something about how their energy is consumed. If you remove that last row, guest night, and you just show me 191 and 168, I may still have some doubts that were they operating to full capacity? Was it banquets? What is the reason for this change, right? But that last row tells me, yes, there is something useful in it. Now come back to what SEBI has said in core. This core document is useful in a couple of ways. So, okay, it tells you for energy, we are looking at parameter, what is energy consumed, the measurement is in joules. That next column, data and assurance approach. It gives you some information on how these numbers are arrived at. Total energy is equal to non-renewable plus renewable plus purchased electricity, heating, cooling, steam plus self-generated electricity, heating, cooling, steam. Okay. So all these are totaled. And now imagine you're the assurance guy. If you're the assurance professional and you are going to sign this off. Then you're going to seek evidence for these line items which are mentioned in this column. The client should have prepared, the data preparer should have prepared, adding up these. You, the assurance professional, would have to do this, and you, the consultant, can guide your client along these lines. Now, when we go a little elsewhere into energy and emissions, you'll find that some of these numbers are technical calculations, which means either the client has a professional who knows how to measure these things, or there is an external technical resource that is brought to help get these things. These are important points to make mental note of if you're going to go into assurance. If you're going to be a consultant, important point is to find a techie and hang on to that person for dear life. Come below to energy intensity. When you look into energy intensity, you can see there the first thing you require, look into the column that says data and assurance approach. You need the total energy consumed, which is from the previous section. You need the total revenue from operations. You need that from audited P&L. And you need to take the USD INR rate from World Bank website. And then when you want to calculate intensity, it is energy consumed divided by revenue, energy consumed divided by PPP, and then look into that last row down there. This is based on activity metric. Like Shripriya gave that example, how many cars did you make? So what is your energy per car made? If you give me energy per car made, I can compare Tata Motors to Hyundai to Maruti Suzuki within the industry. But then you need to know what is the metric for the industry. Data in million terabytes. You can see down there, data in million terabytes. This is for people that provide data center services or activity, or that are huge IT hubs and are providing that as a service to their clients. And you'll be interested somewhere. I have somewhere the data on how many data centers are located in India. So what is the energy consumption in those kind of environments is measured by data in million terabytes. Put the energy consumption in the numerator, put the data in million terabytes in the denominator, and say my energy consumption is 168 gigajoules per terabyte. That gives you a measurable number. And this changes by industry. We just saw hotels. We looked at guest nights. Now we are looking at data centers. Then we took the example of vehicles. Metric ton of material produced is another such activity metric which tells you per unit how much. Now, I have invested the time in covering this intensity metric over here. When we encounter the same scenario situation in waste, I can go a little faster. Now, you as a consultant can help your client pick the correct activity metric. You as an assurance professional should pick the correct activity metric to see whether you're understanding the trends, whether you're able to corroborate the data. Is it making sense? Last year his electricity consumption was so much. This year it is this much. How does it compare to production data? Production data is different for a aircraft company, for a car manufacturer, for a data center, for an IT company, it may be per employee. You got to figure that one out. Okay. I just also picked, as I told you, PAT, the Performance Achievement Trade Scheme in energy intensive industries. So here you can see Indian Hotels is given by property. Taj West End Lands End, Whitefield Holiday Village Resort. What was the target given? What have they achieved? Right. So how are they doing on managing their energy consumption under a completely different scheme of the government of India, which has been brought into the BRSR report, right? Just like environmental impact assessment is brought in, just as social impact assessment. These are all done somewhere else, brought in. CSR obligations, done somewhere else, brought in into BRSR, right? This is another one of those brought-ins. Any questions on energy? Or I think questions are to be asked in chat, right? Okay, fine. So anyway, we will look at some, we'll keep some 5-10 minutes towards the end for questions. I'm going to go now into water, and I'm going to do water in a slightly clever way. I'm going to go into my grouped water. And these are the 6 things that BRSR measures in water, out of which 4 are essentials, which is water consumption, water discharge, zero liquid discharge, and pollution control. And 2 are leading indicators, means voluntary, stressed, and resource efficiency. Now let me simplify these 6 for you. We already know what is pollution control. Pollution control, you did a violation, somebody fined you. So that comes there. So it's a did you pay a fine or not kind of issue, leave it. P6LI4, the rightmost extreme. Have you undertaken any project to bring down your consumption of water in your core operations? This is where a consultant, a chartered accountant operating as a consultant, bringing together water engineers, if necessary, or working with the client's water engineers, if necessary, and pointing out where in the client's organization, this is not only for water. P6LI4 is resource efficiency across environmental factors, which means for energy, for emissions, for water, for waste, for hazardous waste. In all these cases, if a customer has got 5 units, which are the units? What is the average for the company? Which are the units which are performing better than average? Which are the units which are performing worse than average? Very simple thing to tell management is, one particular plant of ours is consuming way more water than the remaining 4. Let's bring in an engineer and reduce that consumption of water. And then your resource efficiency goes up, your BRSR report goes well, and the client cut its cost. That means earning per share went up. That means you justified your consulting fees. But you also opened up a consulting kind of engagement with that client. So that leaves us with what? That leaves us with water consumption, water discharge. And zero liquid discharge is another. Let me just knock off zero liquid discharge. Zero liquid discharge is a strategic wastewater management system that ensures there will be no discharge of industrial wastewater into the environment. It is achieved by treating wastewater through recycling, then recover it, then put it back into your industrial consumption cycle. It is a water treatment engineering thing. You can read more about it on the World Wide Web, or if you access this resource, you can click that and it will open you a good resource and get your client to consider a zero liquid discharge strategy. So if you don't already have it, I'm going to go back to water and say water consumption, right? So water consumption is one of the areas which it's one of the main areas, as I told you. Energy, emissions, water, people. Energy, emissions, wastewater, people. Is like the dominant obsession to the exclusion of everything else. People tend to obsess with these few. And then some distilleries forgot about child labor. So obsess with, yeah, top 5, but don't forget, Shri Priya said 135 data points. You just need to mess up one data point called child labor, and your stock will tank by 25%. So when I look into water consumption, again, I can show you the format. You can see the format, not a big deal. But here is somebody's format. Okay. Again, Indian Hotels. Indian Hotels is water format, and Water discharge, we picked Unilever. Okay. So see this now. Water withdrawal, because a hotel primarily draws water for restaurants, rooms, swimming pool, etc. How much do they? How much? So water intensity is calculated in the same way. You can see the last row, water intensity, kiloliters per guest night. So the metric for measuring water is kiloliters. Then go to the top of, okay, so these are all the surface water, groundwater, third-party water, desalinated water, rainwater storage. By whatever means, this is the total of the water consumed. And divide by turnover, you get water intensity per rupee, and adjust it for purchasing power parity. What is your water intensity? And what is your water intensity in terms of output? Again, same metric he has put in the denominator, guest nights. So you can see the water intensity for this company, Indian Hotels, is down from 22-23 to 23-24. And we've been seeing for years in hotels, I mean, just years. If you want this towel to be washed, leave it on the floor. Otherwise, keep the towel on the bed or the back of the chair. One towel consumes so many hundreds of liters of water to wash. And you know, at home, we wash the towel maybe once in 2 days, 3 days. So you're okay with leaving the towel for a day. And then please ensure you put off the tap, and then sending technician to check every room. Once one guest checks out, go there, check all the walls are okay. Because leakage is the biggest. Leakage and a faulty dripping tap, and the guest has not informed you. But you take all those strategies, you can bring down. When you bring down your water consumption, when you bring down consumption of any input material, you are improving your profitability. So this is how they have reported it. And now I will go to what is the data and assurance approach mentioned for core. Water consumed is water that is no longer, I am reading from the third column, okay? So for hygiene. Measurement is in millions of liters or kiloliters, okay? Data and assurance approach. Water consumed is water that is no longer available for use by the ecosystem or local community, such as water that has been withdrawn, incorporated into products. Incorporated into products means mixed it with the drink. Orange juice, this much water, okay? Incorporated into product, or is evaporated, or is polluted to the point of being unusable by others, therefore not released back to surface water, groundwater, seawater, third party. It includes water that has been stored during the reporting period for use or discharge in a subsequent reporting period. And how do you calculate? It's given over there. Input water flow meter logs, output water flow meter logs, water consumption is equal to input minus output. So there is also this dimension of drawing water, but using only a part of it. And then the same concepts are given in calculating intensity. And these are the metrics. When you go into intensity, what is the correct denominator to apply for comparability within a company last year to this year, comparability within an industry, this company to the next company, comparability across industries, how water intense is a particular industry. And if you are an assurance provider, you need familiarity with this. And Shri Priya ma'am is working on, the CA Institute is working on how assurance standards will be adopted and deployed in this country. But current thinking is you will go look at these record of measurements. Okay? You're not expected to go and look at how the what the water meter looks like and stuff like that, obviously. But so that is then water consumption. And then I'm going to go back to water discharge. What is the second one? Water discharge. Okay. Now, water discharge is an important one. You can ask me this question that which company is going to say, yeah, whatever the water we used, we released it untreated into, the river near our house. Nobody is going to say it in that way. But you just need to go and look into the rivers near your house. Go to any river downstream of an industrial area. Here in Bangalore, there in Delhi, Bombay, wherever you want. There are certain places in Bangalore where the foam, the chemical in the water, when you churn it, like how you put soap in a bucket, it becomes foam, filling the river and the sky. So somebody is discharging these untreated water. This is from Unilever's report. So here you can see water discharged by destination and level of treatment. Now, because the BRSR format is a form that you have to fill, every company's report looks like the same form that has to be filled. Commentaries, extra remarks are placed either after, alongside, or before this table. But this is the core data. So our friends at Unilever, with treatment 60,957 kiloliters, handed over to third party for disposal. You can see there, sent to third parties, serial number 1, 2, 3, 4, sent to third parties with treatment, secondary treatment, 60957. And you can see remarks down there. Wastewater is treated in the company's own effluent treatment plants through secondary treatment and then discharged in line with consent requirements of the Pollution Control Board. Like financial assurance providers are not detectives, but have to apply due diligence. Same way with sustainability reporting assurance. You are not a detective. You don't have to walk around the plant and see whether there is stained soil in the site adjoining the factory and all that sort of thing. But yeah, due diligence. And, you should be able to. So it is there in, where is it? It is here. Where is it? Here. So there is somewhere in this core document that if a technical provider has certified the data, then the assurance provider may rely on the certificate of that technical agency to certify to assure himself regarding the BRSR report. Okay. So here you go, the different types, and it defines what is primary treatment, secondary treatment, tertiary treatment. Okay. So one is plain filtering. Second is removal of some chemical treatment. And the next one, tertiary treatment, is advanced chemical treatment, removing even more of the infectious materials from the water. Okay. These are various ways in which. Now, to be sure, this is Unilever, which has a fairly large manufacturing operation, but also that a lot of Unilever's manufacturing is contract outsourced. So if it is contract outsourced, that is why when we were doing the environment, you see serial number 10, value chain partner. So if you do contract outsourcing and you are amongst India's top 150 out of this 1,000, SEBI expects you to reach into your supply chains and make sure that they don't release water untreated into water bodies. And we as chartered accountants should get our clients to do that so that they can win Unilever as a client. Both ways it goes. Back to water, one important thing in water is stressed water. Stressed, if you see P6LI, means not mandatory, it's not essential. Leading companies in an industry lead the way by reporting this data. So when you look into stressed water, it is a very specific designed aspect. The company needs to know what is the groundwater situation, where it sits, and then what is the action that it takes. So I can look directly into, this is ITC, Unilever. This is you. Where have I used ITC somewhere else? This is Unilever. You can see what they have said. As per the Central Groundwater Authority. So in our reference tool, we should put Central Groundwater Authority link. You can go there and you can get which are all the water stressed areas. Now, water stress is a technical definition. But for us professionals, we don't have to worry about the technical definition. Central Groundwater Authority has listed which are all the stressed areas. Otherwise, stressed areas are areas where the water base level. Now, most city dwellers know this because in their apartment complex, if they have a bore well, then they know exactly how many thousands of feet down that water table has gone. So the lowering of the water table, you have to go deeper every year. The guy next door buys a new plot and drills a well, and he comes back and he says, "Arey, Mr. Sharma, you told me that water is available at 100 feet. We drilled 500 feet. 3 years later, the next guy comes, he says, you guys told me 500 feet. It is 2000 feet. And we drilled 6 times and only 7th time we got some water over time." So here's what they've done. They have to report water withdrawal, consumption, and discharge. This for stressed areas. For normal areas, water withdrawn and consumed is separate, discharged is separate. In stressed areas, L1, LI1, withdrawal, consumption, and discharge. So how much did you withdraw? And then how much did you consume? And then how much did you discharge? And likewise, you have to tell how much you discharged into surface, ground, third party, sea, and by any other means. And it is the template is the same as the one we saw for plain water discharge, right? We saw the one for the plain water discharge. It is the same way. Where was plain water discharge? Here was plain water discharge. The template is the same. Water discharge, treated, untreated, surface, ground, seawater, third party, others. In all cases, treated or not treated. If treated, secondary or tertiary. Okay. That is about water. How are we doing on time? Not bad at all. Now we skipped emissions in the middle. So let's do emissions. Okay. So emissions, there are what is called scope 1 and 2, which is covered under EI7, greenhouse gas emissions. And EI6 is non-greenhouse gas. So greenhouse is more potent. Non-greenhouse gas is slightly less potent. There are different categories. Greenhouse gas is major cause for global warming, which is this extreme summer that we are having, extreme dryness. With the dryness, skin disease, rash, respiratory disease, all those things are caused by global warming. Global warming is caused by greenhouse gas emissions. And under this, you can see P68, EI8 is, do you have any projects to reduce this greenhouse gas emissions, right? So these are the dimensions what they want you to report. So let us just go into this greenhouse gas. Greenhouse gas, as I said, directly responsible for global warming. Okay. Now I'm going to share with you the tables and SEBI's core requirements. But let me first tell you what is, you can see here it says scope 1, scope 2, and somewhere else it says scope 3. What is scope 1, scope 2, scope 3? Scope 1 is emissions done by me. That means if I am running an industrial unit, how much emissions have we in our production capacity, in our facilities, by the fleet of trucks, buses, vehicles that we own, operate. I. 2 is scope 2, that which I buy. What do you buy? You buy electricity. So how much emissions I generate. By how much emissions via the electricity that I purchased or any other resource that I purchased. And supply. That is all the emissions that my suppliers generated, which is value chain. So I buy supply, scope 1, scope 2, scope 3. And it rhymes, I buy supply. So what is scope 1? I. What is scope 2? Buy. What is scope 3? Supply. Now you tell me what is scope 1? The emissions I generate. What is scope 2 emissions? Whatever I purchased, electricity, the emissions from there. What is scope 3? Supply. Whatever my supplier emitted, his emissions. I buy supply. Again, I am pointing out to chartered accountants. Here is the opportunity. If you are manufacturing toothpaste tubes and your emissions per tube is lower than the industry average, then you can go to Colgate and say, instead of buying the tube from X, Y, and Z, buy it from us. Our emissions are lower. It is an attractive buying proposition for Colgate because in the Colgate report, he has to show if he is a core company and eventually everything will apply to everyone. So he has to show to his stakeholders that he is bringing down emission by working with suppliers. Right? So you can aspire to become a supplier to big company, or if you're already a supplier to big company, increase your share with that particular company by improving your environment footprint. These are business reasons to go knocking on the door of your client and sensitizing them to BRSR and telling them this is not mandatory for you, but if you do it now, we can grow 3x, and that's how to grow your practice. So that is what scope 1, 2, 3 is. I buy supply. Finished. We're done with scope 1, 2, 3 in like shortest possible time. And you can go on studying it, no problem. Now, here's what the report looks like. Right? So CO2, carbon dioxide, is the primary measure of greenhouse gas. It is the main greenhouse gas. Then all these other guys, this CH4, N2O, HFC, PFC, SF6, NF3, these are all cousins of carbon dioxide, if you will. They are not chemical cousins, but whatever they generate is converted into CO2 equivalent, which is what this notation represents. CO2e means I generated CH4, which is methane. The quantity of methane that I emitted, if I convert it to carbon dioxide equivalent, it is 5.4 units. Now you might say 5.4 tons of CO2 or whatever is this, what is the metric, man, of CO2 that we generated is not a very big number. But to understand that number, you need to understand the intensity of the CO2. So CO2 comprises 71.6% of all greenhouse gases. And the main sources for CO2, it took me some effort to compile this, electricity and heat. See, for Western countries or for industries where steam is an integral part of the manufacturing process, electricity and heat is 27%, transportation is 17%, agriculture, every time you, till the soil, you churn the mud. When you churn the mud, the carbon dioxide that is trapped over there is released. When an earthquake happens, if the earth breaks, the carbon dioxide trapped inside those rocks releases. When a volcanic explosion happens, huge amount of carbon dioxide gets released into the atmosphere. So volcanic explosion and stuff like that happens, it tilts the balance of the earth in its entirety. But man, in small units, aggregated, has done what volcanoes do. Volcanoes do it in the space of 3 days. Man has done it in the space of 30 years. Manufacturing and construction, 12%. The next greenhouse gas is methane. This methane is there are so many charts. So many thousand times carbon dioxide. Okay? Quantity in the air will be low, but its impact will be so many thousand times of carbon dioxide. So 20.7% of all greenhouse gas is methane. Now look, serial number 1, livestock. If you've got cattle, if you've got poultry, if you've got sheep, goats, all these guys generate methane. In India, we have cows. Cows give milk. India is also one of the largest buffalo meat exporting countries in the world, by the way. But if you go to Brazil, Argentina, the West, United States, they have huge farms whose job is to grow cattle for the purpose of food. That means they grow the cattle, they give it some feed, then the cattle is converted into meat. During the life of that cattle, it generates huge amount of methane. And we are not talking about how much feed, you see agriculture in the previous set, it's 12%. So when you grow feed for the cattle, that is also generating carbon dioxide, and the cattle is also generating carbon dioxide. So actually livestock, non-vegetarianism is a very, very large contributor to greenhouse gas. Then comes natural oil and gas, because same logic as farming. When you cut open the earth, carbon dioxide got released. Methane, which is part of the hydrocarbon chain. Landfills. What is that place in Delhi which caught fire? Ghazipur landfill or whatever. When you put waste and cover it, after a few million years, it becomes oil and gas. Within a few days, it becomes stink and methane and comes directly into the air. If you drive past the landfill in Delhi, your skin will actually go prickly. You'll get pinpoint pricks on your hand. But you'll feel that microscopic particle will be landing on your skin, you'll feel it. That generates 11%, right? So that is methane. Then nitrous oxide comes agricultural soils. So 12% there agriculture, 7% here. So one of the things you will encounter is land reuse. Trees capture carbon dioxide, push it into the earth. You cut the tree, the capturing of carbon dioxide came down. You dig it in order to put the construction site. The moment you dig it, whatever carbon dioxide being pushed by the tree into the earth got released. Then you build a building. Thank you. Construction industry, 12%. These are all there. Now, when you are working with your clients, obviously everyone uses electricity and heat. Everyone uses transportation. But not everyone is in agriculture. Infra industry is in manufacture, construction, right? So this gives you a sense of which industry my client, the company where I've gone for assurance, what is the nature of the industry, and therefore see this sources from Environmental Protection Agency USA. This is not my genius that I've mathematically worked out who is generating what. I just created the table. Okay. So when I look back into the report, now this report makes sense to me. Now here is a company, Hindustan Lever. No, this is your IT company, TCS. So here is a company which has given a report on its emissions. You can see what are the different kinds of emissions they have tracked. Here is where you need a emissions specialist, right? So there are conversion factors. I'll tell you about conversion factors in a moment. But just look into this. Scope 1, what got generated in my premises. Okay. Now the obvious largest one is carbon dioxide. It is a straightforward. But that last one, HFC, it comes from air conditioning, right? So there are other. So each of these, there is a table which generates what? Just a table. How to convert it to carbon dioxide? There is a conversion factor. You multiply the measured value of HFC with a conversion factor, you get CO2 equivalent, which is this notation over there. Metric tons of CO2 equivalent. Scope 2, scope 1 is I, scope 2 is buy. This is what I purchased, and therefore his emission became my emission. 73,722. And converting it into intensity by dividing it with revenue from operations. So yeah, IT companies love to show this decimal number, which is 0.00000004. You have to ask them, do you include your data centers? Because data centers consume huge amount of energy and they also consume huge amount of water. But that is for a consultant, that is not for an assurance provider. Then come to, you can convert it. You see there, intensity is converted per head count. That FTE down there is full-time equivalent, which means I'm looking at the last row. Per staff, how much is our emissions? But if I went to the data center, it will not be per staff, it will be per terabyte of data managed by the data center. When I go into the SEBI score now, see the column headings are the same, attribute, parameter, measurement. And we are interested in measurement and data and assurance approach. So measurement is total scope 1 and 2 emissions, metric tons, total revenue from operations adjusted for PP. Total emission, add 1 and 2, revenue from operations as per audited P&L. PPP, take the USD INR rate from your IMF. And intensity, again, you can see the same metrics. Vehicles, material, data, number of seats, travel class, room nights, whatever. In the denominator. What is called activity metric? Something that tells, did the economic activity go up or down? Put that economic activity measure in the denominator, put the emissions in the numerator, and you get the intensity. I am repeating so that it sits well in your head. Intensity makes comparable for company last year to this year, this company to that company within the same industry, between industries. And when we say between industries, please remember one thing. You have to understand the value chain of an industry in its entirety. An IT company, what we see is people going to office building and coming back. And then we imagine the computers and the emissions or whatever from that computer and that sort of a thing. But these companies are also offshoring giants. So Americans, Europeans, UK, those big companies have sent their data centers to bonded warehouse STP area in India. Then what happens? Just as they sent their smoking chimneys to China, they have sent their energy and water hungry data centers to India. So you really need to understand all the sources of revenue inside a company to understand the full implications of it. Or you're going to be one weird character like me who goes and does research on what is green data center, how can data centers... Yes, so somebody has asked the question, why is revenue the parameter and not units of production? Units of production for within the industry, when the unit of production is same for one company to another, like car, like two-wheeler, like liters of orange juice, like units of electricity, like so long as the unit of production is comparable. If it is not comparable, then revenue. That means outside the industry. One of the challenges in India, and this is where Shri Priya is so correct in saying we are evolving. One of the challenges in India is one company decides to use for energy intensity, for example, room nights. The other guy uses room nights occupied. So one guy is talking about how many rooms he has. The other guy is talking about how many rooms he sold. That means occupancy rate is involved. And the third guy is saying emissions per rupee revenue generated. Now, all three are in the same industry, not comparable. And none of them is wrong in having chosen the method for calculating intensity. But by doing this, the comparability goes for a toss. Now, the moment comparability goes for a toss, I may not know how many rooms ITC Indian Hotels has. I may not know what is the occupancy rate at Welcome Group. Then my fallback line of defense is revenue. So I simply take all hotel companies, emissions divided by revenue and say, here is a number that I can get and work with. Okay, so comparability, when you give options and you particularly use the word etc. at the end of your sentence, as a regulator, SEBI has put etc. over there, which means as much as you can understand, kindly do. Now look here, this data and assurance, you can see here, 6 serial numbers are there in the first box. What does it say? Absolute fuel, emission factors. Now look at serial number 2, emission factor. Emission factor. If you say that you are using a car which was manufactured in 2021, its CC is so much, it uses petrol, then its emission per kilometer of running is so much. That IPCC has put out the document, or GHG, which is the agency, Greenhouse Gas Protocol, not-for-profit international body, has put out some tables. Or US Environmental Protection Agency. If you go and see, if you look into the research in this domain, you'll be quite surprised. Many of the apps which you are seeing, now, I'll help you calculate your, he will ask you, what do you have if you're a taxi company? What car do you have in your fleet? So he'll ask you by model. Huh? He'll say Tata, this brand, this model, how much, and Hyundai i20, how much, how many cars you have, and so on and so forth. Actually, he's not giving any regard to the brand and the make. He's just looking at the engine capacity and year. And then he's taking an IPCC number and saying per liter this much emissions, or per kilometer this much emissions, and going with it. And as far as I have seen these tables, 2015, 16 is the earliest, latest table that they have. We are in 2024. So it's a moving science. Okay. But you as an assurance professional have to be able to look into this methodology for calculation. If you're a consultant, you should bring in a guy who has all that and help your client calculate this. Okay. And that I think we have done a better job of emissions than most people, but let me also cover scope 3. So I told you scope 3, right? I is scope 1, what I emit, by my purchased mainly electricity and my suppliers. So this is from value chain. So this is the one which gets the maximum time. It will take more time for people to start reporting scope 3, because for scope 3, you have to catch all your suppliers, all your customers, and say, when I say customer, don't think, Reliance Jio supplied me internet, so they're going to come and ask me what is my scope 3 emissions. No, we are saying, I am Steel Authority of India Limited. I supplied steel sheets to a car manufacturer. That's a customer. And he is doing a production process. So that's a value chain. Similarly, I am Steel Authority. I purchased iron ore from Kudremukh Iron. And then when he did mining, how much emissions did he generate? This is scope 3, upstream, downstream. And SEBI says for the top 150 companies this year, 250 companies next year, and so on and so forth, find out from upstream, downstream, covering about 75% of your purchases. So here are these gentlemen from TCS who have given it like this. Category 1, purchased goods and services. Category 2, scope 3 is voluntary, this is not mandatory. Scope 2, capital goods. Scope 3, fuel and energy related activities, which is not in 1 or 2. 1 is I, 2 is buy. Other than that, upstream transportation and distribution, waste from operations, business travel, commuting, total of scope 3, and directly converted it into intensity. One intensity is by turnover, the other intensity is by number of staff. And the last thing perhaps, yes, the last thing perhaps that I will pick up is waste. Waste management, right? So industry generates a wide variety of waste. The disposal of this waste has to be handled responsibly to avoid contamination. We Indians don't have to think too much about the problem with disposing waste. I went for somebody's funeral. On that side, there was a graveyard. I went into the graveyard. There where they think that nobody goes. And of course, who goes into a graveyard? That too, the road went straight, then it curved by some. And I decided to see road. Where is it going? I went. And there somebody has come and thrown huge quantities of shattered glass. You can't even touch it because it'll just slice you. He has just brought the truck, dumped it there. On the other side, somebody has just come from some hospital or something, put all the medical waste over there. And I live in a locality which is being newly constructed. So there's a lot of open green area with roads, lighting, and painted, and sewage, and water, and everything. One of the construction site has taken the entire building material and dumped it in an area where nobody comes and goes. Finished. When that fellow comes to build his property, he has to see what to do. And I have developed a map. You can see it on my LinkedIn page. Bangalore, there's a ring road. Inside the ring road, all the trees are gone. It is constructed. Outside the ring road, they took the rock from the green belt outside the ring road, built the buildings over there, took the construction debris from built up Bangalore, dumped it in the place where they took the rocks from. That side is a gone case, this side is a gone case. Okay. So we all know what reuse is. You can, under serial number 1, there is a global circularity report by industry category has shown you how you can bring back. So if you are Hindustan Lever and you package your shampoo, you can actually get that shampoo bottle back. And all of us remember this. You can see my video on Coca-Cola. When we were kids, you could go and get Coca-Cola. That guy would take, I don't know, I started out with, 10 paisa security deposit to bring the bottle home, and maybe went up to 2 rupees or 2.5 rupees to bring the bottle home. Then what you have to do is return the bottle and he'll give you back your 2 rupees. And then the bottle goes back to Coke. They wash, rinse, refill. Now it's become plastic. That was glass bottle. Then you have UN's e-waste monitor, very useful resource. You can see what are the various types of e-waste, which country, and how to deal with it. Broader global waste outlook. This also talks about, Shri Priya talked about exporting waste. It talks about international trade corridors in waste. Okay. Serial number 4 tells you who are the waste recycling firms in India. So that if you need to do e-waste disposal, you can call them and say, here's my e-waste. And you can imagine a company like TCS, which has 615,000 employees and largest turnover in IT, how many mouses, wires, keyboards, computer monitors, as a minimum, they may be running through every year. Then what do they do with it? So what they do with it is, see, HCL says what they do. What are the various categories? Plastic waste. Would you have thought that an IT company has plastic waste? 12,000 tons. Okay. E-waste, even biomedical waste they have. Okay. And one of the things that always fascinates me with IT companies is their construction waste. You see that line D, construction and demolition waste. Huge number. All IT companies have this. Continuously building, their campuses, I suppose. So you have a huge number. Sir, can you highlight how we put value addition to SME sector? Yes, this I definitely will do. Even if I have only 2 minutes to do it, I will do it. Then after you total your A, B, C, D, E, F, G, H. So when you go to a healthcare company, and there are how many healthcare companies? So we've done industrial map of India, top 1,000 by industry sector. There are about 15 or 18 healthcare companies like Apollo and all these guys. You have to go there and look at their biomedical waste. Come below. How do they dispose? So you can see absolute bottom of there. Category of waste: incineration, land filling, other disposal operations. Land filling 133. Okay. And look at one box above, recycled. 59,566 metric tons recycled. And reused 43,023 reused. Right. So they have given the metrics. Then they have given the intensity. This is actually, when you go into waste, the metric required is highly complex. I'm going to explain it in a simple way. How much waste did you generate by category? That waste, how much of that did you reclaim? Of the quantity that you reclaimed, how much did you reuse? And that reuse is what percentage of your sale by product category is a data that BRSR requires companies to produce. So when you look at that equation, you require certain amount of data to be able to report the reuse recycle as per the BRSR template. I have broken it down, not here. I have broken it down because it's not simple. Okay. In one place, it is reclaimed by tonnage. In other place, it is reused by tonnage. Then in a third place, it is what percentage of reused comprises packaging by value. So you need, and then by category of materials. So when I say category of materials, look here. Plastic, bags, bottles, pallets, something got missed over there. Let me just make it pratyaksh for you. Go away, my friend. There you go. Absolute weight of the packing materials. Weight. There is bags, bottles, pallets. Discarded as defined under blah. Discarded e-waste. Computers, television, cell phone, VCR, the lot. Biomedical waste. All this blood and solid liquid. Construction and demolition waste. So we have an industry category called real estate. We have an industry category called core infra. We have an industry category called construction. When we are in this massive research exercise, we will be looking at, when you go into a real estate and construction company, you're going to look for category D. Last is this battery e-waste. Okay. And there are so many rules under which you have to dispose it. So when you go into this, no, there is a, where is it? It is under hazardous. I'll show you later. Hazardous waste. CPBC has the rules for disposal of hazard waste. Radioactive waste. There are some unexpected companies that have radioactive waste also. Then waste intensity. So when you look at this entire, you see, look absolute bottom. Amount of material in metric tons disposed through incineration, means by burning. Amount of material which is sent to a landfill. Kilogram of waste recycled, recovered, divided by total waste generated. So recycle, and there is something called life cycle assessment. This is a large area where, together with a technical provider, good amount of consulting can be done. Now, I have mentioned over here that there are a number of companies available for recycling. So when you click it, I mean, I hope you are able to see the screen. Can you see this, which says top 10 waste management and recycling companies in India? So there are companies. Now, what the reporting company does is it says, I gave it to a recycling agency. And hopefully the recycling agency is doing a good job. And if he is not, because he is not a top 1,000, right? He is not a top 1,000. I'm going to quickly switch to how to make sense to SMEs, and then I'm going to hand over for Q&A. And I know somebody has written something in chat. I will go to that, but please give me one moment to pick up my favorite test slide of them all. How should a chartered accountant talk to industry? That's my absolute favorite. I mean, absolute favorite. Because I do think that this entire area fully belongs to chartered accountants as a community. Because you are in a much better place to understand most of these issues than non-CAs. So I am a practicing CA. I should become a business enabler. The first thing you can do is you can show your small and medium enterprises. When I say small and medium enterprises, it is anybody up to 250 crores under the MSME definition, 1 to 5 crore, 5 to 50 crore, 50 to 250, whatever. Show them how to become supplier to Unilever, Colgate, Dabur, Steel Authority, blah, 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 blah. Show them that by meeting these standards, you can enter US, Europe, so that if you sell the same thing in dollars, you get 80 times the revenue. And the defenses are going up in Europe and US. What do I mean by defenses are going up? They are simply saying, you must have seen the news item that MDH and Everest has got a lot of contamination. So Donald Trump will not support ESG sustainability if he becomes president. In America, he may not apply any rules, but he will stop Indian exports. Now, he would like to stop Indian exports by imposing duty, but India will take him to WTO and file case on him. It is a tariff barrier. He will simply impose non-tariff barrier by saying Indian masala companies have got poison in them. Indian garment manufacturers use child labor. Indian papad makers use, slave labor. So I am banning. You can't object. So you want to export. Now, global regulation is uneven. You can tell your importer, see, I don't know what is the law in your land or that land or this land. In my country, there is a law, and here is my voluntary compliance, and here is the assurance, and please accept my goods. At least he will listen to you. And I have very good case study of Bangladesh, but I have case study, but I don't have time. Sourcing capital. Banks, no bank wants to be in the Kanpur, affluent into Yamuna situation. So banks, venture capitalists, everyone started asking, what are your green credentials? Then, if you want to head towards IPO, which I mentioned earlier, then new project ideas. So when we were talking about renewable energy, I spoke of hydrogen. Government of India has got an 8 lakh crore investment plan for hydrogen, green hydrogen. Out of this 8 lakh crore, 20,000 crore is a seed capital equity funding grant, not equity funding, grant from the government of India. For whom? For green hydrogen is not Nitin Gadkari building 100 kilometers of more of road. There used to be road, he's building more. This is complete greenfield project. Electrolyzer has to be built. Technology is nascent. Catch one IIT. Government is doing that. Catching an IIT, catching some entrepreneurs who are willing, giving them grant and saying, come on, build. Then people who are in steel pipe, steel vessels, pressure vessels, storage tank business, all this requires specialized treatment for holding hydrogen. All these guys are eligible for this seed capital, which is a grant, and can invest public-private partnership 8 lakh crores, $100 billion. Go look up National Green Hydrogen Mission. Secure that funding for your client and charge your client a fee for the funding that you secure. And the business will make sure that your client's business never goes out of fashion. Only that much. There's no end to this story. Questions. Can we say that Indian corporates are less active in ESG parameters and it's Can we say that, let me generalize this question, can we say that the West is exporting their dirty industries to countries like India? Yes and no. I would accept that statement as is if we were not dirtying our country ourselves. First, we are dirtying our country. Then how can we accuse him of dirtying our country? When he dirties our country, he offers you dollars. So you're like, okay, we are in poverty. We need to climb out of poverty. I will take your dollars and lift myself up. After that, I will clean up India. Okay. So only partial yes. And please bear in mind, the European Union, we are working on a project where EU wants to know what Indian affiliates, subsidiaries, or captives of European parents are doing in India. So it's not, they can't export and get away in a broader sense. For scope 2, we consider energy, which is also included in energy emission. No, you are, yeah, I'll just answer that question and we can conclude. You are reporting the electricity that you consume and the emissions that you buy. And there is an element of double counting, but since you're reporting it separately, it can be addressed separately. Okay. But some amount of double counting in GHG is there, which is under research, is under work to resolve it. Thank you very much. I'm sure there are millions more questions, but in the time, over to you, ma'am.
Thank you, sir. Thank you, sir, for your valuable sharing insights with us. Now I request CA Ankesh Sinha ji to give vote of thanks.
Thank you, sir. Thank you, sir, for sharing your valuable insight with us. As we conclude today's enriching session, we extend our heartfelt thanks to all our speakers, participants for their engaging contributions and for fostering a deeper understanding of sustainability practices. We invite you all to join us in future session to continue this vital conversation. For those who wishes to revisit today's discussion or catch up our previous session, we encourage you to view them on ICI TV available on SRSB channel. Thank you once again for your participation. We look forward to welcoming you to our future events. Stay connected, stay informed. Goodbye and take care. Thank you everyone.
Thank you very much for the opportunity. Thank you. Bye-bye.
Thank you, sir. Thank you, sir.
Thank you.